warm good morning to all of you. I would like to thank each one of you for joining us this morning for the inaugural of Micro Enterprise Financing Track. The track is curated in partnership with Michael and Susan Dale Foundation. I would like to welcome and introduce the esteemed speakers for the session, Dr. R. Bhaskaran, Sector Expert, K.N. Nanaya, Managing Director, Equifax, Geeta Goyal, Country Director, India, Michael and Susan Dale Foundation, and Ajit Pai, Distinguished Expert, Niti Aayog. We will kick off the track with the opening address by Geeta Goyal, Country Director, India, Michael and Susan Dale Foundation, followed by release of State of Micro Enterprise Financing Report and the inaugural address by Mr. Ajit Pai, Distinguished Expert, Niti Aayog. I will now request Geeta to deliver the opening address and set the tone for the Micro and Nano Enterprise Financing Track for the day. Over to you, Geeta.
Thank you, Arya. And again, on behalf of the foundation, a very warm welcome to all the participants from a bright and sunny winter morning in Delhi. And yes, I would begin with some boring stats on MSME financing and then, get into some interesting tidbits and what we think can actually unlock more in this segment. 63 million MSMEs in India, micro, small and medium enterprises, bulk of which more than 98% is in the micro enterprise space. And we've heard the number often, but I just looked up that 63 million is almost the population of France, more than the population of Italy. So clearly the segment is large enough not just to warrant attention, but also to identify and recognize the different subsegments within it. And clearly for the foundation, our focus has been on what we call nano enterprises. These are not the small and medium enterprises. These are not the tiniest of micro enterprises. These are enterprises, I would say, which have annual turnovers between 10 lakh to 1 crore, typically sole proprietorships, some of them registered with some government authority, some of them not. But it's a large enough segment that there are 10 million nano enterprises or 1 crore nano enterprises. And I would say less than 10% of them today have access to formal finance. And yet, they're running reasonably secure businesses. Monthly revenues of 1 lakh to 10 lakh is decent in the context of India. Almost all of them would have bank accounts either in their own account or in the name of the shop. More than 75% of them have smartphones or feature phones, at least at a household level. And at least in urban areas, more than 50% of them have had some payment, digital payments also. Not 100% of their transactions are online, but they've had at least some exposure to the likes of a Paytm, GPay, etc. But the 50% drops substantially as we go outside the big cities. So clearly, I would say the plumbing is there in terms of phone penetration, in terms of data connections, and the segment has a reasonable business, so it is an addressable segment from a financial services perspective. But we need to up the curve in terms of digital adoption, in terms of more trust on the payment networks for this segment to become more visible. We were just doing a back of the envelope calculation, and I know the Equifax report will throw a lot more data. But even if each enterprise can access a 2 lakh rupee loan, we are talking of like a credit market of 2 lakh crores, which is actually double Airtel's turnover. And at a 1 crore turnover, these enterprises can actually easily take even 5 lakh rupee loans or more. So that's 5 lakh crores, $65 billion. So this is a large market, and as I said, it's with some push, it is definitely an addressable market. And with access to credit, these enterprises can actually move to the next level of growth. So clearly, even from an India economy growth perspective, it's an important segment. And I believe We at the foundation have said that in order to unlock more credit to this, what do we need? And we really categorized the challenges into two big buckets. The first one being just access to the customer and the ticket size, and the second one being, risk assessment, credit assessment, and risk mitigation. On the first category of access, just and the small ticket size, why this is not viable for the big banks or the big NBFCs to service, I think technology is playing a key role. There are several digital enablers in place. So if we can really, make the cost of servicing the loan, the cost of collections, the cost of assessment low, there's definitely some, these loans are sustainable from a financial service provider perspective. So yes, we've invested in a few seed funds and accelerators that are pushing digital adoption in this segment. Bharat Inclusive Technology Seed Fund being one of them. And I think there are several fintechs playing in the space already of digital adoption. I think some more push to get them, one or two notches lower so that they start servicing nano enterprises so that we make that transition smoother is, I guess, something that, we've been trying to do along with several other stakeholders. And I guess in the upcoming panels, we will hear a lot about that. The second category in terms of risk assessment and risk mitigation, I would say where the push has been, and a lot of it will really come in the future, but what we've been trying to seed is to say, can we have credit scoring platforms that use alternative data for this segment, which actually provide that as a service and an underwriting facility to other NBFCs? Because these data platforms need to get very rich with data. Only then the machine will get trained to make the right decisions. And if each fintech develops its own platform, it will be high investment and resources, and the data availability would not be that strong. So can you create many more stronger islands of this risk scoring and credit scoring, either in the public infrastructure or on the private side? But fewer the better, and use it as a service rather than proprietary engines to lend. The second one on the risk mitigation side, I would say, is credit guarantees. Again, in the last 2 years, especially post-COVID, we've also been working with several wholesale lenders as well as retail lenders to MSMEs to say how partial credit guarantees can actually give the lenders much more comfort to unlock newer markets and to take on higher risks. It's a journey, and I'm sure we'll get there. There are several government schemes also that are supporting risk mitigation. And, some combination of public schemes, private schemes, data assessments, I do think will help us cross the hump on risk mitigation as well. And the third thing I would say on the risk mitigation side, that is something where maybe you, Mr. Ajit Pai, you can throw some light, is to say, how do we create a more level playing field for NBFCs that lend to the nano enterprises? Because most of these are uncollateralized loans, so their credit ratings are low. So the liquidity from the banks to them is not that high, and they just get caught in a vicious cycle. So either some special scheme, some categorization, so that they are able to access the liquidity to lend to a segment, which of course is considered high risk. There is less data and doesn't have a security to offer. So in summary, as I said, two big areas for us to focus on. One on the digital side, so that we can keep on reducing the cost of accessing and servicing this customer. The other on the risk assessment and risk mitigation side, so that newer markets can be unlocked. And really, how do we get to service these 10 million nano enterprises with loan sizes anywhere from 2 lakh to 10 lakhs plus minus, but in a fairly market sustainable way. I do think these are the enterprises that will actually graduate, to the small and medium enterprises. Only with access to credit, only with access to markets, they can actually, invest more in automation, more in efficiencies, and get India to the next level of growth. So with that, I would just like to make one other last point is, and in the last 2 years, we observed this. I think we've committed almost $20 million to MSME finance, or I would say nano enterprise finance in the last 2 years. This has the potential of unlocking almost 5x of that, so 100 million, 700 crores. Still a small drop in the ocean, when you compare to the 1 lakh or the 2 lakh crore market that we are talking about. But yet it's, I would say, reasonable enough to start catalyzing the market. But the one gap we noticed is that there is very little research to say what type of credit is needed for which segment of the market, for which industry, where does credit actually lead to a much higher exponential growth. So what should be the stage of the enterprise? It should be a new enterprise, 5-year-old, what should be the formalization status of that enterprise? So some research on trying to say, identify the different segments and the impact of credit on those different segments will also help us move the needle in the right direction. We've, of course, initiated this study at a very small level at the foundation. It takes 2 to 3 years for any such study to complete. But again, if stakeholders come together on the research side also, I think that would give good inputs for different practitioners to move forward. With that, Arya, I would like to hand it back to you. As I said, the space, the nano enterprise space is a large space. Even within this, there are segments. But again, I would just say it's an addressable market. If we move the right levers in 3 years, we should not be having a panel or inclusive finance for nano enterprises. They should have moved out of the need for this, and we should move to other problems. But I also think the timing, and the environment is right now to start making some of these changes.
Thanks, Geeta. We sincerely hope that the little efforts that we do here, that really matters and it impacts those who really need it. And we hope that 700 crore that MSDF has kind of committed in some way or form, it really catalyzes the market. So thanks for that address. Moving on to the release of the State of Micro Enterprise Financing Report 2021. The report is an Access publication brought out in partnership with Equifax. I request the team to show the report cover, please. And at the same time, I request Nanaya and Ajit Pai to unwrap the copy of the report. Team to show the report cover. The report is authored by Dr. R. Bhaskaran, sector expert.
Very well done. Very well. If you give your report is open, it takes a lot of time.
Yes. There we go.
On Monday. Thank you.
Yes. Request to show of the report. The report covers nuances of financing to micro enterprises. It attempts to understand where such business borrowed from and how they repaid their loans, how these loans are distributed across India state and union territories, and what these loans are being used for. It captures the issues that lender faced during the last few months and what are the recommendations to improve the financing for these businesses. We hope that the State of Micro Enterprise Financing Report will over next few years become a key reference document for capturing the trends and insights on lending to the missing middle and provide critical inputs for policy formulation in promoting financing to this segment. I request Nanaya to present the high-level finding of the report. Show the presentation.
Thank you very much, Geeta and Shri Ajit Pai, and all from Access Assist. Thank you very much for this opportunity. We are delighted to partner with Access Assist in bringing this report. This is the second report in the series that we brought out, as you rightly pointed out. we expected this to continue and become kind of a reference point for, policymakers, practitioners, and industry to use this report when they look at the market, when they make policy changes and interventions. I think that's the objective. So we do have very similar reports on other sectors, in whether it is coming to microfinance or fintech, so which is a very, very regular report that we bring out with SIGBI as well. So this is an insight that comes from the huge amount of data that we have in the credit bureau. So, and also thank you, Mr. Bhaskaran, for authoring this report. I know it's been a long effort, but thank you so much for the support and bringing this together into a very nice little story, and also drawing conclusions from the report. So moving to the next slide, can you put it into PPT mode? Yeah. Moving to the next slide, the report essentially covers a couple of different chapters. I'm not going to run through all of that. You could move to slide number 2. Looks like there is a lag. So there are multiple sections of the report, which is a lot more deep dive into areas that all of us would be very, very interested. For example, the entire MSME origination and credit flow, the business loan, agriculture, business loan, retail, Mudra, commercial lending, the delinquency moratorium, and also a little bit of summary and conclusions on that. I'm not seeing the slides moving, so I'm not sure if there's a challenge in moving this.
Who's managing the slides?
We are. Give us a moment. We are fixing it, sir.
Okay, and then put into the presentation mode.
Presentation mode, so that
Yes, we will do that. Yeah, we're just fixing it. Yes.
Okay.
Right. Excellent. Yeah, so you could move to the next slide. This is broadly the contents of it. So we've lost the slides now. We're seeing ourselves on the screen now. Yes. Okay, excellent. We're back there. We can move to the next slide, which talks a little bit about who we are. I know, bring that into context. To slide number 3, please. While we wait for slide number 3, that's about Equifax. Just to give you all a sense, I think you can see the 3 boxes on the side there. Those are the 3 data engines that we run. The leftmost is the microfinance data engine, which is bottom of the pyramid lending, group-based lending environment, which includes self-help group as well. The second one that you see is the commercial and MSMEs and SMEs, which is MSMEs, SMEs, and large corporate borrowing. And the right box is the retail, which is all of us, you and I, individual borrowings. So between all these 3 exchanges in the country, we cover the entire loan classes that are available from formal credit ecosystems. So entire asset class is covered. In the banking parlance, they call this as asset, but these are different loan types that are given in the country. And combined number of the loan information that we have is well over 1.8 billion records. So that's the vast amount of data that is in the repository with us, which is historical, which is current as well. Just to give you all a sense, on the retail is about 500 million borrower information that is available as we speak. On the microfinance is about 100 million plus borrower information, and on the commercial is about 26 million entity information is it's in the bureau. So we very naturally leverage this data to provide insights and inputs for credit underwriting, risk underwriting, also market entry, strategies, and also insights. We're also building a large exchange for managing fraud risk in the lending space. With the increased digitization, I think there is a need for protection on the fraud risk side as well. So we're building a fraud risk management exchange as well as part of this. And all this data is covered by a very powerful analytical platform called Ignite, which enables you to triangulate large volume of differentiated data assets to be able to bring the insights that are required by, again, the industry, the practitioners, and also the regulators. So that is the power of data and analytics. So our broader objective is to enable access to credit. We play a very humbling, enabling role for the industry in the country, providing the data that we have. So that's enabling access to credit is the role that we play as Equifax. So you got to move to the next slide, the slide which is on methodology. So This is, as I said, this is a second report, the last one that we released last year, and this is the second one, and we hope to continue bringing this report on a year-on-year basis. So the primary source of data is our credit bureau data, which is Equifax credit bureau data, and we have restricted this review and analysis to loan sizes up to 20 lakhs, because that's a category in which I think the large volume of loans are either disbursed or consumed or required, especially is the missing middle that we are all talking about. I think that's the most important. That's the fuel that is required for that engine to run in the country. I think that's where our large part of the analysis has been. And we stayed on, subcategories of business loan retail, business loan for agriculture, Mudra, and commercial loans. And majority of the loan categories, which I'll talk about in the subsequent sector, would be under the 20-25 lakhs that we talked about. The data that you see is for the period 2020 and 21, which is ending March 2021. That's the data that you see. However, in the credit bureau, there's real-time data ingestion that happens from all the lending institutions. So data is available, as of we are in December, so we could have data as of October live in the credit bureau environment. So that's how real time the data ingestion happens. There is also references made for multiple data sources in the report. References made to data from the regulator, the RBI, and also MFINs and various institutions. So that's broadly the approach that has been followed. There is a section on MSME origination and flow. I'm not going to talk in great detail about what we have covered, but in a nutshell, the largest element of the loan segment is 25,000 to 2 lakhs by virtue of volume, not by value. If you look at just the volume, that is the largest volume of borrowing that happens, and that truly goes back to say that small enterprises, truly micro enterprises who require money for cash flow, capital, I think that is the financing that is happening. So numbers are very, very reflective. Though by value, obviously the larger volume of values will take over. And interestingly, in the entire lending landscape, 98% of the loans are under 25 lakhs on the MSME side of it. 98% of the loans are under 25 lakhs. And I think 2,000 to 2 lakhs is also a very important segment where I think a lot of loan categories are seen. PSUs play the largest, they have the largest share and very, very active in financing the MSME and this particular segment. And interestingly, even the private banks are also playing a role in the very small ticket size segment, which is 0 to 20,000 loan categories as well, which could be even a very smallest of businesses in the country. Could be a roadside shops and stuff like that. So I think they're playing a role in that space as well. So that's a broad landscape. It looks like from an MSME standpoint. If you're moving to business loan, agriculture, a very interesting trend, right? We've all been hearing about the impact of COVID on the economy, and then the recovery thereof, then the interventions that came in. So if you look at this graph, the top graph shows, that the first is January, February, March 20, then the April, May 20, which is the blue bar, which is lower. That's where the disbursements came down. And then January, July, August, September, the middle one, which is where the peak is, as exited the lockdown, when the markets started opening up and the disbursements also started increasing. That is the true fuel for the MSMEs and the agriculture sector that they wanted financing. And then it kind of flattened out coming October, November, December, and the January, February, March of 2021. So if you see the sanction amounts and the number of loan accounts, both have gone high. So if you look at the business loan agri as such, the overall disbursement last financial year has been about 1,09,000 crores, has been the disbursement. And the number of loans is about 9.8 million loans that have been disbursed in this sector. Obviously, the loan ticket sizes have largely been limited to about 25 lakhs. And the graph which is on the bottom, which talks about the distribution within the country as to which region the country has the highest share and which region needs a lot more, maybe a support or help. The South has the highest share both on number of loans that have been approved and the number of value of loan that has been approved. So see the graph, which is a steep graph onto the right side of your screen. That's the South region where 80% of the volume is coming from the south region. So the significant high penetration on the business loan agriculture in southern India. And PSUs continue to be having the largest share in this segment as well under the priority sector lending. So that's on the business loan agriculture. If you move to the next slide, the business loan retail, which is normally the borrowings that are done by the small industry, small enterprises. So there, again, we've limited 25 lakhs. The overall disbursement has been 68,446 thousand crores, and about 5.4 million loans have been disbursed in the last financial years. And very interestingly, in the business loan retail category, there are about rupees 7 lakhs accounted for about 95% of the loan accounts and the 53% of the loan amount that is sanctioned. So again, you could see that, what type of an industry which is looking for what kind of financing, and 7 lakhs looks like, 0 to 7 lakhs looks like an area where they're looking at financing. True to the point that I mentioned earlier is, it's about working capital, it's about maintaining the cash flow. I think that's where this financing is helping the engine running, right? It's just truly a fuel for that MSME to run. I think that's where the contribution is coming up. And if you look at the region-wise on retail as well, again, the graph is not that skewed as the agri is, but it's a little bit more flatter and even across the country. But at the same time, you see the peaks in southern India, and then you have central India, and then western and eastern, followed by north and northeast region. So again, south in terms of the value of disbursements and the number of disbursement, all and the peak. The orange bar actually indicates the ticket size of 0 to 7 lakhs. So if you see the comparatively, 0 to 7 lakhs is prominent across the country. And that is the space that, I think the borrowers are looking for loan, and also the lenders are feeling confident to make a decision on giving out loans. So it's a two-way traffic. The borrower's capacity, lenders' confidence to make decisions to lend at those ticket sizes. I think that's very, very clearly indicative. Graph, if you see, little bit different from the agricultural side of it. So obviously, April, May, June of 2020 was the lockdown, the COVID impact. The loan offtakes were lower, the business movements were lower. But January, July, August, September started to pick up. But you see the consistent recovery on business loan retail, which is a very positive sign. As opposed to retail, agriculture, there was a pent-up demand that came up in July, August, September, and then it kind of flattened out. But in retail, it is a continuous recovery of loans in terms of value, which is a very, very positive sign for the country and for the industry, right? There's a consistent demand. So the businesses are growing, the cash flow is running, so they're borrowing more, and then, businesses are coming back to some amount of normalcy. And obviously, January, February, March, I think it's peaked back to the pre-COVID kind of level. So we looked at 5 quarters here, because to give you all a perspective, because the reason 5 quarters is the first quarter of 2020-2021 financial year was a COVID hit. So we wanted to see how pre-COVID and a post-COVID. If you see the first bar and the last bar, almost 21,423 to 21,579. So the post-COVID, January, February, March of 2021 has really crossed the pre-COVID levels. Very marginally though, but that's a very positive sign of a recovery there. So that's on the business loan retail. Very quickly moving to the Mudra loans. Again, the trends of disbursements are very, very similar, which is, you got to move to the next slide, which is Mudra loans. Again, about 6,923,000 crores have been disbursed to about 65 lakhs loans in last financial year, which is the amount of loan, the ticket size looks very similar. It's again 7 lakhs is the maximum concentration level. So that's the segment with 95% of Mudra loans are in that segment, up to 7 lakhs. And interestingly enough, South again has the highest share. They have 29% of the sanction amount on Mudra and 17% in Eastern India. And from an entire Mudra loan standpoint, except for the lockdown period, you see a very consistent disbursement that is happening all through the financial year, all through the 5 quarters, I must say. Obviously, the PSUs are also playing a very active, very important role on the Mudra loan segment as well, and that's where the largest submission that is coming into the bank. The only caveat on this is, the Mudra loans get submitted to the credit bureau with different nomenclature, so the full impact, in our could be higher than what we are seeing because it gets submitted in different categories. So that's on Mudra loan, and if you look at the commercial lending side of it, these are loans up to 25 lakhs. About 2,91,000 crores have been sanctioned last year, and about 1 lakh crores from an account standpoint was sanctioned. Again, very, very similar to what we saw a little bit earlier graphs. The July, August, September was the peak, pent-up demand, the need for the industry, the interventions by the government and the regulator, everything, and the support systems, that were provided. I think really saw the demand for the loans getting picked up both from value and volume standpoint. And after that, I think it's kind of stabilizing in some kind of a flow. Again, South has the highest disbursement, both in terms of number of accounts as well as the value. It's about 29%, close to approximately about 70% is the disbursement that's happening on South, then followed by West and Northern India. That's where the commercial lending trends are seen. So that's broadly where we see as a commercial lending. If you look at the delinquency and performance, I'm not going to get into major details of it. I think a lot more data, very crowded slide, but I think it's an important slide for assessing the performance of the portfolios, assessing the performance of the loans that have been approved, and also the intervention, the restructuring announced by RBI and the regulators. So if you see, 16.36% of the Mudra loans got restructured. So that's where the support system comes into play, and also the restructure due to COVID was about 14.89% under the Mudra loan. I think some of the sectors within the banking environment, I think SFBs took advantage of the restructuring, and they have the highest amount of restructuring that's been done, and including the moratorium. The moratorium that was announced by RBI. I think the largest segment of the borrowers who avail moratorium is again in the MSME segment. So if you look at the story, how well the story ties into the data, right? We've all heard about MSME getting impacted, the small and medium enterprises going through a very difficult patch due to pandemic and COVID. And you look at the data, and the number of accounts that have chosen to go moratorium is the highest in MSME. Obviously, they had the stress. I think they were greatly benefited by the moratorium announced by the regulator. I think that's the true intervention to support the system, and it's very reflective in the way the moratorium. 77% of the borrowers chose the moratorium, and about 70% of the outstanding amount chose to be in the moratorium. It's very, very I'm super excited because we're a data company. So when you look at data, and when data tells a story, we're so super excited that how data ties into the story and the narrative that we all hear across the country, right? So powerful is the data, and we help the industry, the lending ecosystem in the country with the power of data. And just to summarize, I'm not sure if I've run out of time or I'm on time. Just a summary of conclusions. It's tough to read. It's a very crowded one for all the benefit. Our analysis is shown while I've talked about the ticket sizes, 7 lakhs seems to be the theme. That's the maximum concentration. But majority of the MSME loan disbursements are in the range of about 3 lakhs. If you average out, take the little bit of the noise up, and look at, it's about 3 lakhs, which may be sufficient, may not be sufficient. To really support the MSME's quicker recovery. Maybe there is a scope for enhancing the quantum of loan in that particular category of borrowers who have been borrowing 3 lakhs. Maybe there is a scope for improving the quantum of disbursement. Obviously, MSMEs contribute significant part of the GDP. I think whatever enhancement that happens in terms of support of the segment will be of a great help. And the COVID lockdown, the resultant impact was very clearly reflective in the data that I spoke about. The impact and the recovery thereof is very, very clear story, very, very clear linkages from a data standpoint. PSUs are obviously playing a very, very large role. What we see emerging, to the point that Geeta made, is about the fintechs, the technology that is coming into play, enabling access to easy credit. For example, so all of us, we can access our credit report from a bureau. To just give an example how we are enhancing that access, obviously you can access the credit report on our websites. We've also enabled access to the citizens of Telangana state through their common service centers, which is called Me Seva. So one could walk into a Me Seva center in any part of Telangana and be able to access the individual's credit information report, which is very, very important for accessing credit. Knowing about your credit history, the credit rating is very, very important before you go and apply for a loan. Ability to get a loan sanctioned and potentially ability to get a better interest rate depends on how the credit history has been, how the credit rating has been there. So we've enabled access to our Equifax credit report through the Seva Center, which is about 4,000 plus centers in the state of Telangana. So that also, forms part of, how we are enabling access to credit literacy, getting to know more about yourself before you look for a loan for personal requirements or, for business requirements. So that's on the tech side of it. And I think the data reflected that South possibly has the largest share of borrowing on the MSME segment. So that's the long report in short, about 30 minutes. It's difficult to do justice for all the hard work Mr. Bhaskaran has done to digest the Equifax data, but hopefully made some attempt to give some light into how the report looks like. Thank you all very much, and I'd like to thank Niti Aayog for this opportunity to be here in your office to release the report and also be with all of you on this event. Thank you.
Thank you, Nanaya. It was very insightful data, incisive presentation, and it was very helpful to see the regional distribution and the distribution trend, disbursement trend that we have observed. We hope it provides requisite inputs for decision making. I will now request Dr. Bhaskaran to kindly present key recommendations that he has for the policymakers basis his study of the report. Mr. Bhaskaran, please unmute. Please unmute, Mr. Bhaskaran.
You'll have a copy of that report.
Am I now audible? Good morning. Hello.
Yeah, we can hear you, Mr. Bhaskaran.
Thank you very much, Access Assistant Equifax, for giving me an opportunity to go through so much of data. I really enjoyed the job because I looked at the numbers from different angles. I have heard Geeta and I heard Anaya, and the enthusiasm about the performance is interesting. I started banking. I didn't really prepare like this, but I started banking in the year 1975 when lead bank scheme was started. And every year when we review, we used to laud ourselves saying that we have achieved. Today, when I come to the suggestions, I'm going to slightly disagree with the earlier observers and try to say why it is. Mr. Nani was very correct. I was given data of up to 3 lakhs, 3 lakh to 5 lakhs, 5 lakh to 7 lakhs, 7 lakh to 10 lakhs. It was a very large set of data. For convenience sake, I took up to 7 to 15, 15 to 20 for analyzing the purpose. Therefore, the conclusion was that majority of the loans are going at 7 lakhs. Actually, nearly 80 to 85% of the loans are going at less than 3 lakh rupees. The average loan size is just 2 lakhs. This brings me to the first recommendation I'm making. Despite all the achievements that we have made, despite the priority sector performance being fantastic, there is a need for looking at adequate credit. Rupees 2 lakhs, just not sufficient for any industry of any size to do business. Possibly, I have written that the banks are having a priority sector mindset and inclusion mindset, and they're giving kind of a thumb rule type of loans for banks. Let me just say why it is. The total size of the banking business in the country, in that you have roughly 6 trillion going to MSME loans. It is correct that nearly 50% of the nano units have been covered by bank loan, but it's just about 3 to 4% of the total size of the balance sheet, or about 6%. We need to do more more can happen only if the size of the credit goes up. And this is not me saying. I was going through the governor's speech where he says that I don't find micro units moving into small units or small units moving into units. This is the same in the economic survey report in 2018 presented to the parliament. Also, the finance minister says that, look, this is just not happening. We need to do something about it. That something is for the banks to treat micro enterprises as business, not merely compliance to priority sector or financial institution targets. And that something is giving them more, and that something is identified. Mr. Nani was again correct. Stress is very natural to the segment. They gave me a lot of data on delinquency. I did a lot of analysis of the delinquency data. I found that apparently the NPA is 10%. But when I really looked at the stress, how do I define stress? I take stress is something which includes all past due loans, NPA loans, and restructured loans, and loans which have been where NPA has been kept in abeyance. Just, I recall what I've written, it's averaging around 30% stress in the segment. MSME segment has more stress than anybody else, any other business in the country. Therefore, if the MSME have to withstand this stress, they need cash flows. If they have to withstand this, they need adequate credit, not just any amount less than 2 lakh rupees. It's good. Indeed, what Geeta said is correct. It's massive amount compared to other countries. But within the country, when I really look at 6 crores of MSME units, of which 3 crores are in finance, the credit is just not adequate. That's what I feel. And therefore, I have recommended there is a very strong need for increasing the credit. For increasing the credit, we need to understand stress. Nearly 30% of the loans are under stress. Remaining 70% is not under stress, which means in these cases, the bank should have, based on the track record, been able to lend more, thereby the dream of nano units moving into small units could have been achieved, but this is just not happening. There is a need for the banks to look this as segment, as a business segment, and only then this can happen. A lot of literature, a lot of data I have quoted to prove this point, that access of credit by MSME is very difficult. So difficult that almost everybody is saying that it's not happening, any study you refer. I talked about stress, and I also started looking into the delinquency data. Then I found out that is there anything that the regulator can do to make credit flow happen? I came across this IRSC norms. Regulations are, one country, one norm kind of things. For capital adequacy, yes, there is some proportional regulation. Small finance banks and cooperative banks are given different capital adequacy ratio. If you talk about exposure norms, it's always reference to the capital funds. Therefore, there is no problem. But IRSC norms for commercial banks across the sector is same. If it is 90 days, it's NPA. Banks can finance. If an account becomes NPA, banks can finance more. But the regulator is very clear that the moment you finance, that also is included in NPA. Therefore, you have to make provision. Therefore, you have to provide capital for that. What happens if there is a stress? Finance does not flow. It is evident by the growth rate that has been reported. Maybe 2% growth is what happens. There is impressive numbers. If you really look at the amount of money, it is good. But in terms of growth rate, it is very small. So what is that necessary? And therefore, I came to the second recommendation that I made, that there is a need for giving proportional regulation for IRSC. Why? Not from the bank's perspective. Banks have finance, banks have capabilities, banks are strong, they can withstand the NPA norms, and they can have a good balance sheet, but not the MSME. Because the moment the account has become NPA, the credit flow stops. However genuine the reason is the sector affected frequently? Yes. Look at the circulars issued by Reserve Bank of India from 2017 to 2021. There are 6 or 7 circulars acknowledging the stress on account of demonetization, on account of introduction of GST, on account of COVID-1, on account of COVID-2. I'm doing this COVID-1, COVID-2 because there are 2 stages, first stage and second stage. Now we are threatened with the third stage. And every time they say we relax and restructure. Only yesterday morning when I was going through the Economic Times, I found restructuring is not easy because banks yesterday gone back to Reserve Bank of India, say that we could not restructure. Can you please extend that time? Because there is a process. It has this circular of Reserve Bank is to be understood for MSME. If I'm a very small borrower, my loan limit is 2 lakh rupees. I need to go back to my branch and ask him, please, can you help me? And he can help only if he has authority. If that has to be done, we cannot wait for a regulatory circular of relaxing the NPA norms for this. Therefore, I felt a very strong need for relaxing IRSC norms and give proportional regulations. I've suggested to begin with saying that Why don't you stipulate IRAC norms for MSME less than 25 lakhs, because that is the segment I studied thanks to the data given, where I am saying the NPA norms could be 90 to 180 days, maybe 2 restructuring to 3 restructuring in a span of 5 to 7 years. And you can put additional conditions, but let the banks have the power to frame a policy within this and delegate the powers to the branch manager, such that when I have a problem, when I have an event risk, I classify them as event risk because there are too many black swans in MSME. I didn't want to use the word. Every time something outside, something external to the MSME happens, they have cash flow problems. Demonetization, cash flow problems, not business problems. GST, there was both business and cash flow problems. COVID now, stoppages have business problems and cash flow problems. If you have to understand this, we need to frame appropriate policy. Therefore, the recommendation that there could be proportional regulation for IRS. The last recommendation is about, or what I'm going to talk about, is capacity building. MSMEs do not understand the norms. I work as a mentor to some of the fintechs and MSME. I enjoy doing that. And the problem they have is they don't understand banking, they don't understand the norms. And I have to keep on telling them this is very important. If you don't do this, your credit will be stopped. If you don't do this will be stopped. Because banking is full of definitions, agreement is full of definitions, and they don't understand because they are interested in running the business. So capacity building is about making them aware. How many banks really tell when I take credit about the NPA norms? How many banks tell me when I take credit that this will affect your flow? This is necessary to be brought transparently. Guarantee. You mentioned, so you also made a recommendation that 50% guarantee is good. But actually, when the word guarantee is announced in the newspapers and items, that 50% doesn't come, it is guaranteed. So MSME thinks if I default, the banks is not going to have a difficulty. So what's the problem like? So we need to be very transparent. We need to understand. We need to build capacity. MSME is the lowest level of the supply chain. Anything happens in the supply chain impacts them more severely than the rest of them. So we need to build proper supply chains. For that, technology is important. I just mentioned about the size of the balance sheet. India today is, like yesterday morning in the inaugural session also, I heard about M-Pesa. India today, in terms of payments, has 1,417 trillion transactions, of which 1,408 trillion is digital transactions. It means, yes, India has the largest and is possibly the biggest in terms of the transaction happening through electronic and other media. But how much of it has reached the MSME? I'm not sure. I don't have the data. We didn't study this data. But if this facility can reach the MSMEs, and if they can be brought out of depending on cash, but the transactions can happen through some of the problems like what happened in GST, what happened in demonetization can be avoided. It is necessary to look very closely into the need and bring them onto that page. So in respect of small loans, if the banks also start educating the MSMEs about how to use technology, how to use transaction through that, it will be much, much better. I've just covered 2-3 important recommendations to me. Thank you very much for this opportunity. I enjoyed writing this book. Thank you.
Thank you, Dr. Bhaskaran. Thank you for sharing your recommendations. And we sincerely hope, since Ajit Pai sir is around, he would be in a position to take some of your recommendations and take it to the appropriate decision makers. I would now request Shri Ajit Pai, distinguished expert, Niti Aayog, to provide the inaugural address for the track. Over to you, Mr. Ajit Pai.
So much, Shilpa, and I want to congratulate both Access Assist as well as Equifax and Dr. Prabhakaran on his wonderful, wonderful initiative on a very, very critical subject for the country. So first of all, Dr. Prabhakaran, I can tell you that we are, Dr. Bhaskaran, we are looking at the areas that you have highlighted, both to end with capacity building and then also the proportional regulation. These are two of the areas that Niti Aayog and my team are very, very focused on. On your first recommendation, which is looking at average loan size and increasing it, I think you're echoing what Geeta Goyal also said, that we are all hoping that while we are addressing 2 lakhs today, that same individual will be taking 5 lakhs tomorrow and 10 lakhs day after tomorrow. So we are all working in the same direction. I think your recommendations are well taken. It is a priority for Niti Aayog. What you and Niti Aayog and us should be discussing further is how we can work together and see where the bottlenecks to this happening are within the system, because that will allow us to address it. Where is it? Is it the RBI? Is it the DFS? Is it the DA? So we need to identify where those bottlenecks are, and our team is very happy to work with you very actively because down on the ground, you seem to have a very, very good knowledge of specific areas where the problems are from the customer perspective and the actual lender perspective, why they are doing what they're doing, why they're not lending. So that kind of understanding would be very valuable for us to capture. And I'm not sure whether it's captured in the report. I've not been able to go through it completely. But that knowledge that was buried in your sort of comments on your recommendations is something that we could benefit a lot from. So in addition to the wonderful publication that I look forward to going through, we also look forward to staying in touch and getting that download on your 3 suggestions so we can work together on it. That said, let me sort of give a perspective from a different side now. I think they've looked at it from a bottom-up perspective. Geeta spent a lot of time, as has Mr. Nanaya, on the bottom of the pyramid moving up. But let's talk about why this report is as critical as it is to what India's economy is going to do, and from an overall perspective, why we believe it's so relevant, and why Niti Aayog is very proud to be associated and co-host, to the event, and also to be a promoter of this book, to be very enthusiastic about. And the main, one of the most interesting things about the Indian economy, when I looked at it relative to the rest of the G20, is that private credit in India overall is very low as a percent of GDP. And this is both a reflection of why our past growth has been very slow, but fortunately for us is also an excellent sort of predictor of, if we get it right, why our economy can grow much faster than the rest of the world. Because the rest of the world is awash in debt. They're looking at 340 to 370% total debt to GDP. They're reaching the end, while the credit rating agencies think that the highest per capita GDP countries, if you have the ability to pay based on your income, are the most reliable and rate them higher than a country like India, several notches higher. We actually disagree with their model, because in India, all of us know that it's not the richest that don't pay their debts, that pay their debts well. It is actually the bottom of the segment. Most of the default, if you look at it in the MSME segment that we talked about, the 17.7% rate that was talked about by Mr. Nanaya, that rate is actually because of actual business failure. You're looking at, when you have small enterprises growing, any entrepreneur, you'll see that the failure rate for a new enterprise is higher, naturally. But interestingly, when you look at the NPA composition in India in 2014-15, the vast majority of the capital was locked up in very, very big loans. So our banking sector, the vast majority of the debt was misdirected. And do not look at that 17.7% as a higher default rate, because in the big loans there's a lower default rate. You have to look at it as the natural risk relative to the malified risk. And I can tell you that in the MSMEs, the malified risk is much lower. It is normal business risk. Because of being smaller, you have greater risk. So we have to consider that as a country, we have to be allocating more capital at the best possible cost to the sector, because the failure rate will be there, but this is what's going to grow up to become larger and larger, and finally move through that from the micro to the small to the medium to finally the large enterprise. So the entrepreneurial in this country is very high right now. We've had 52 unicorns in this country that have reached valuations that are very significant. It is a very optimistic moment for this country right now. But what this book does, it's ensuring that pipeline for the next unicorns in the far future, the base of the pyramid that will actually be consuming the products that these unicorns make or the middle make, all of those are going to be served by taking away some of the biggest impediments. Now, we spent some time at Niti Aayog, our team, looking at why was India's credit to GDP so low. So many reasons. I think Dr. Bhaskaran has talked about some of them. Reluctance of the banks to lend, etc. But what was the core cause? And the core cause was not so much risk aversion, which is what we thought initially when we started, of the bankers, of people who want a loan to take a loan. The core cause, according to us, was lack of formalization historically for the past 50 years. That lack of formalization is lack of data. So when you go to get a loan, how do you get a loan if there's no data? So the historical legacy was a lack of data across the spectrum. And now you can go down to the core cause of why was there a lack of data. So there are multiple reasons. One was that people didn't trust the system. They didn't want to be part of the system because they felt that either the taxman, the regulator, the inspector will come. The second reason was people did not have capacity. They didn't understand how to be part of the formal system. They didn't know what to do to report it. And the third, of course, is the popular reason that the taxman will talk about, which is you didn't want to pay your taxes. You wanted to avoid what your duties and responsibilities as a citizen of this country are or operating a business are. So what the government did and has done in the past 10 years has actually been fantastic for formalization of the economy. We have 430 million new accounts in this country over the past 7-8 years, where the definition of one of those accounts that's opened is that no one in that family should have had another account or be part of the formal system. So that is a massive increase in formalization within the economy where there's some kind of track. Now, we're not saying that that is perfect because we don't know how many people are using those accounts and know how to use those accounts, but you need to be able to crawl before you walk, before you run. I think we have moved beyond crawling. I think we are now walking. But India, given the sort of very long runway it has tremendous potential to run. We have very low credit to GDP. And the base of the pyramid and the MSMEs that are so spread out, that are so many and such a large composition, are what are going to drive majority of this growth. And as they formalize, GST, in addition, why is GST so effective in formalizing? Previously, you only had the stick, not the carrot when someone formalized. The stick was you paid service tax, you paid sales tax, you paid all these different taxes. But if you didn't file, you didn't pay those taxes. With GST, when you've taken away the cascading taxes and you have input tax credit, suddenly the businesses have an incentive. They have the carrot. We have seen massive formalizations since July 1st, 2017, since GST formally began. And a lot of businesses are becoming formal. Many businesses are discovering that actually what they saved as for taxes by staying small and not borrowing is far more than offset by the fact that they will now get credit far more easily. You have a formal track record where you can provide credit. So the banks that don't want to provide credit and all these small, the MSMEs, especially the lower half, that were going out there and taking loans from money lenders and other people at very good interest rates. I've heard of interest rates as high as 3%, 4% per month. And these kind of loans gradually will become history. Not that I want to prevent the people, those business models from making money, but the biggest driver of growth in this country would be by helping the small entrepreneur grow faster and reducing his cost of capital. So I'm not saying that those people that were earlier providing loans were gouging, because it was far more risky. There wasn't enough data, there wasn't enough quality, they were bought at a very high rate from the banks, and then they were on lending, so there's a risk, they've got to make money. But gradually what has happened and what this book reveals, as well as the efforts of Equifax and similar credit scoring agencies that we like much better than the credit rating agencies, they have sort of created a database now with all the formalization that's happened. The number of accounts that you heard about, I think we heard about 500 million accounts so far. I would expect that to balloon in the next 2 to 3 years because many more people are going to be get access to credit. Now we've had one massive sort of offset or obstacle that would have kicked, that has prevented credit again when we were getting very optimistic. Generally, it is 3 years of data that starts giving companies like Equifax and others, start making them confident that the data is going to become a reliable predictor of the future, of behavior in the future. So 2017, July 1st was GST. So the 3rd year anniversary would have been 1st July 2020. And we all know what happened in the months before that data would have been reliable. We had the pandemic begin. We had a significant interruption to Indian business. And unfortunately, it impacted everybody. The people with good credit, the people who are irresponsible, the people with bad intention, everyone gets impacted. And it becomes much, much more difficult for the lender, even with the data that's provided, to be able to help identify, what we can do, how to lend, what's a good bet and not. The government did step in. There was a moratorium. There were credit increases, limits, all of those to help. But unfortunately, the core way to analyze is not helped by those. It helps the businesses survive and do better. So it reduces the amount of scarring. But subsequently, it has created some complexity there. And I'm looking at using tools like big data, AI, all of that over a longer time series to try and ensure that at least the most creditworthy, can get credit, much faster than, would otherwise have been with just looking at everybody's revenue down. And the banking system is so averse, they find it very difficult to lend to someone whose business is going down, is losing money, and all of that. So that transition is something that I'm very excited by. I'm also very excited by the fact that the greater visibility and the greater work that is done in this area that we have and significance of this area, we can all focus on building the base of the pyramid. The base of the pyramid is very much the MSMEs. It is the core. And I'm hoping the conversation that we have a year from now and then 2 years from now would be looking at, with the rapid growth that is happening, the visibility that's happening, the technology that's being applied, the neobanks that were referred to, no one used that phrase, either fintechs or neobanks, but are enabling those big balance sheets of the banks to actually go out and lend. What's very encouraging when I look at all this technology, I look at all this new data, is the fact that the balance sheets of the banks on the liability side, which is all the deposits, whether it's the Jan Dhan, which is the bottom of the pyramid accounts, or the rest, they've been growing in double digits right through the pandemic. So the money is there. Yeah. The balance sheets of the banks have been repaired over the past 5 to 7 years. It's cost us a lot in terms of credit growth of the overall economy. It's cost us maybe, according to our calculations, 300 to 400 points of annual growth to GDP. Just the credit, the slowdown in credit because of cleaning up a system. But that work is done. Things are stabilized. Credit growth is anemic overall right now in mid-single digits. But because of the firm foundations that we have established and more work like what you have produced over here in a document, I think you're going to see this segment become a larger and larger part of our overall economy, of our credit structure. And given that the fact that even this same data is going to be helping the mid and the larger, and we have managed to prevent a lot of scarring, that even though India just surpassed in the most recent quarter its GDP of the pre-quarter peak, so we're already back to what we were prior. Our expectation is that with a lot of the help that's happening at the base, the middle, and even at the top, we should see accelerating growth, and we should recover that gap. What they call scarring should not remain scarring 2 to 3 years from now. We should be back to where we would have otherwise been at our previous slow rate of growth, but with a much faster growth, and sustain it going forward over the next decade. So thank you so much, Access Assist. Thank you so much to all of the other panelists and for this wonderful report. It was an honor for Niti Aayog to co-host this event and do it at Niti Aayog. And my team and I thank you all, for the tremendous work that you have done and an opportunity for Niti to be part of this. Back to you, Arisa.
Thank you. Thank you, Ajit, for your encouraging words. And with this, we conclude the inaugural session of the track on micro and nano enterprise financing. I would like to thank Geeta, Nanaya, Ajit, and Dr. Bhaskaran for the time and effort. Dear delegates, please stay tuned in the same hall. We will begin the next session shortly at 11:10. The next session is on bridging credit gap for nano enterprises.